Hi, it's Mark Item again from HONU Trading with a 2-minute drill on why doesn't matter. Before we dive in, remember my catchphrase, small losers win. And also, this is for education only, not recommendations. Know your time frame and risk tolerance. And we're going to get a critical look at why job one is truly risk management. Follow me on Twitter at HONUMGMT, HONU Management, and take a moment to like and subscribe if you're new here. Now, the 2-minute drill is something that happens in American football where at the end of the half or the end of the game, team will try and rapidly go up at the field and try and score points. So today our topic is going to expand on a video I recently did called The Nastiest 4-Letter Words in Trading. There's a link in the description below. Now, these 4-letter words, of course, it's G-rated, but these kick in when you have something that you bought and it's dropped to a loss, perhaps a severe loss. I hope it'll go back up. I know it'll go back up. I don't want to sell it here. It can't go any lower. Why, ? Is it dropping? And that's the one I want to focus on today. And yeah, I know it's cheating to use a question mark to get to 4 letters, but hey, it's my story. So remember, price is driven by buyers and sellers. Economics 101. Supply and demand. If people are willing to aggressively pay more to get into a given stock, it's going to go up. If they're aggressively willing to accept less, then it's going to fall. Buyers will say, just get me in. Sellers are always more emphatic. They'll go, just get me out. So nobody knew why Viacom, and this is from January a year ago, went up. And after the beginning of the year, it went from roughly 35 very sharply, particularly towards the end, up to over $100. And the fundamentals hadn't changed. Nobody knew what was going on here. Well, in just 4 days, it went from 100 back to 50. And after the fact, after this blew up, we found out that Archegos Capital Management, or as I call them, Arch Egos, had built sizable leverage positions in derivatives, and that's what caused the price to go up. Now, there was a secondary offering done right here on March 23. And that was the trigger, and the very next day it started dropping. Well, you might think, well, gee, company issue stock, what's the big deal? Well, companies issue stock only in 2 circumstances. First, they absolutely have to, like the banks in 2008. Or, in this case, if they'd be absolutely crazy not to. They can't explain what happened to their stock price. The management doesn't see any fundamental reason driving it higher. So, hey, we might as well cash in while we can. Let's raise some capital. So it went up and went down, and we didn't find out all about Archegos until somewhere over in here. So remember, the why price rises or falls is unknown, maybe for weeks. The why doesn't matter. Price is the only thing we can trade. And if a sharp rise is unexplained by fundamentals or the market in general, sell some into strength. Ring the cash register. Not all of it, but sell some. And if there's bad news or an unexpected stock offering, sell quickly. Sell first, ask questions later. If in doubt, get the hell out. And remember, my buddy HONU, small losers win.